we start session 6 with my introduction to James Gooder from WLPGA. James, you're in the UK at the moment, I guess.
I'm in London, yes, locked down at my house.
In your house, or we've got you out of your house?
No, I'm at home.
You're at home. Okay. I think we're all working from home these days.
Yeah.
So, James, I'll keep the introduction short, and I'll hand over to you because we're going to have now a bit of a global overview and particularly a look at what happened in 2020 because we're all interested to see what happened then. So, over to you.
Thank you, David, and great to be with you all for having us. My name is James Gooder, and I work in business development at Argus Media, and I've got the honor of sharing some thoughts with you about the global market and some of the implications for East Africa in particular. It's an introduction, so by necessity, it's going to be brief and it's going to be fairly kind of superficial. But if you want to hear any more about any of the topics that I touch on, then please do get in touch. And we have a lot of experts at our disposal that I can connect you to. So, Alfred, thank you for your help. I think you are advancing the slides. Could we move to the next one, please? I think many of you will know who Argus is, so I don't want to dwell on the PR too much. We are one of the price reporting agencies that give the market information about the commodities prices and analyze movements and so on. And we're particularly well known in LPG, so that's why we're here today. Next slide, please. In the LPG area, we publish an international LPG report. That's our flagship publication on the left. This has all the prices in the different zones around the world, including in Africa. We also have various other publications, and we have a very active consulting service who put together our analytics and forward-looking prices, price forecasts, I should say. And so I'll touch on some of those here. But again, if you're interested in any of these things, we can give you a free trial, I'm sure. Just let me know. Okay, next slide, please. So, as David says, it's been a very... I'm going to look back at the year that's just ended, or it feels like it just ended, but we're already well into 2021. The impacts of COVID on LPG have been interesting, in some ways less drastic than the impact on other commodity markets, other fuel markets in particular, because as we'll see, LPG, as you can see here on the left, has a very broadly split demand profile. A lot of it goes into residential uses. And one of the reasons that LPG has been supported during this COVID nightmare has been the fact that we're all stuck at home, and when you're at home, you're cooking more often, you're using more fuel to feed your family, rather than being out at work and driving your car. So in some ways, LPG has been not, let's not call it a winner, but it's done better through this period than some of the other markets that we follow. As we can see on the right here, the COVID impacts are pretty clear. We've had more heating demand in cold countries like mine, and more cooking demand in warm countries like yours in East Africa, and particularly in places like India as well, just across the Indian Ocean, where people have been at home using fuel more. And it has been a rather cold period just now here in the Northern Hemisphere. So we've been using more LPG for heating homes and so on. In non-energy areas, LPG, of course, goes into the petrochemicals area and is used as an alternative feedstock to things like naphtha. Naphtha, of course, has been perhaps impacted by less demand for gasoline, and refineries have been producing less. So petrochemical users have been switching more to LPG during this period. So there's been a kind of pretty well-balanced demand from the petrochemical sector. In other areas, transport, of course, has been down. Maybe it's starting to recover. Industrial and commercial uses have also been down, with a lot of hotels, restaurants closed for pandemic reasons. So as we'll see if we move ahead to the next slide, please. LPG has been able to weather the storm in a way that other fuels haven't. I don't want to dwell on this because it's an LPG conference, but if you look at gasoline has been very hard hit by the COVID pandemic because people simply are not driving cars, and as you can see, it's a very mono-use fuel. Diesel perhaps less so. You use it in generators in places in Africa, I know, and in other parts of the world it's used in industry and so on. But essentially, it's a road transport fuel as well, and that has been hit. Though, of course, we do have a lot more deliveries on our streets as people stuck at home, so we see a lot more kind of Amazon vans and those kinds of things. So diesel perhaps less heavily impacted than gasoline, but both fuels suffering in comparison with LPG. If we could move ahead, please, Alfred. So, as I say, the demand for LPG is pretty resilient. As you can see here, if we look at the world in total, the demand for LPG is off slightly, down perhaps around 2% compared with 2019. So the first time in a long time that LPG has been off that upward trajectory. But if you can think about things like gasoline, it's been down by 14%, diesel off by 7%, and crude oil, which is the kind of daddy of all these markets, has been down by 10%, which is a huge hit. Then compared to that, then LPG has been pretty resilient for some of the reasons that I've mentioned. If we could carry on, please, to the next slide. And one of the reasons, of course, is it's in such strong demand in growing economies. In Africa, yes, but also, and when we think about scale, it's really the Asia-Pacific market that has been driving LPG demand growth over the years. Total demand in Asia's biggest consumption centers, as we can see here, continue to grow. It was only the more mature economy of Japan where we saw consumption fall slightly. But China continued to grow, India continued to grow as well. So really, it's Asia that has driven this demand. It's smaller than previous years in terms of the growth, and global growth, as we've seen, is slightly down. So not growth, but a decline in demand. But striking in this environment of COVID impacts, when we think about commodities and demand for all kinds of things having come under pressure, that LPG should be so resilient. If we could move on, please, Alfred. This is a slightly jumbled slide here, but I'm sure that we'll be happy to share these with you if you want to look at them in a bit more detail. These are some of the main trade flows around the world, and of course it's into Asia, as I've said. That's the biggest kind of gravitational pull for LPG. So much of it comes out of the Mideast Gulf. You can see there, 36 million tons per year. We're looking at 2020, Australia a small amount, but US is really the big demand, the big production growth story of the past 3 years, and that's really pumping its excess NGLs and LPG into Europe, yes, to some extent, but really into Asia more and more. So this is, of course, has an impact on some of the flows into Africa, as we will see. But if you just look along there, where are these big global importers getting their supply from? China's pretty balanced. It has a third each from the US, from the Mideast Gulf, and from other places, including Europe and Australia and so on. But then, if you look at India heavily reliant on the Middle East, the Mideast Gulf in particular, and we'll see a bit more detail on that in just a second. And then further into East Asia, Japan, Korea, these places pretty heavily dependent on US imports these days. So it's really the US that's kind of moved in and taken market share from the traditional suppliers out of the Mideast. Next slide, please. Thanks. So, yeah, Africa's growing well. Let's have a look at Africa in a little bit more detail. So, Kenya, where we are today, virtually and spiritually, if not actually, is really the demand engine for East Africa. If you look here on the left-hand side here, I've taken some of these imports. I should have put on this. This is imports as reported by Vortexa, the ship tracking service, which we use to track some of these movements around the world. You can see that maybe there's been some decline as we come out of that period of high demand growth, but still LPG imports into Africa have been pretty strong over the past year. And then when we look on the right hand side here, this is from our consulting group, who make forecasts not only of prices, but of course of the fundamentals that will drive those prices, the supply and the demand picture ahead into the future. And you can see that while there is some kind of demand growth happening in Uganda and more in Tanzania, it's really Kenya that is the growth story for East Africa. Now, I should say, of course, all forecasts should be taken with if not a pinch of salt, then maybe a grain of skepticism, but the fact is that whatever the numbers, we are likely to see strong growth in Kenya, simply because the economy is modernizing. LPG, for some of the reasons we've heard in this excellent congress so far, LPG is becoming a more central fuel to these nations as they reach more mature stages of development, and that's certainly the story in Kenya. So that consumption, as you can see from kind of 2020, it's already starting to skyrocket, and we expect that to continue for many years to come. So Kenya is going to be a very strong regional kingpin when it comes to setting the tone for trade of LPG into the region. Let's have a look at the next slide. Just briefly on here, this is something that you'll see if you have access to the Argus daily international LPG reports, and this shows some of the price disparities between regions, and it helps to explain why so much of the supply coming into your part of the world is coming from the United States these days, despite the fact you have a lot of supply right on the doorstep. The Asian markets, of course, the Argus Far East Index, that's the box on the right-hand bottom side, it's probably the highest prices you will find around the world, because that's really as I said, the gravitational center of demand for LPG. And then if you move back across the map, we have lower prices in Europe and lower prices still in Mont Belvieu, which is the landlocked hub for LPG pricing in the domestic market of the United States. And it's really the export of the surplus in that market that is driving a lot of the changes that we see around the world. Now, Africa sits amid these key flows, and so it's well placed to take advantage of this surplus of LPG that is flowing around it. And indeed, that is what's happening. Let's have a look at the next slide. Two of the things that as you sit in Kenya and East Africa more broadly, thinking about the supply and the demand and some of the metrics that decide what the prices are that you're exposed to, these are really the US production and Indian demand. Of course, India is not that far away, and it's drawing a lot of that Mideast Gulf production away from East Africa and into that market there, as we've seen. But the US continues to grow, and although the effect of COVID and falling oil prices, though they have begun to recover, of course, or have recovered to where they were pre-COVID, it means that the investment in shale has been less, perhaps, and is a bit more cautious than it would have been before this crisis. But still, we see US production continuing to grow, and that means there will be a surplus available. So these are two things to look at, and things that our analytics team report on a regular basis. If we have a look at the next slide, please, Alfred. This is something that I've been alluding to, but if you look at East Africa, again, this is based on Vortexa data, we see that a good proportion, like more than 3/4 of the LPG that is being imported into East Africa, most of that comes into Mombasa, though some of it comes into other places along the coast. And most of that supply is coming from the United States. And I remember coming down to Kenya, to Mombasa a few years ago, and the assumption then was that most of the supply was coming from the Middle East, places like Qatar, Saudi, UAE, and so on. And that really has changed in the last few years. So you can see that even the smaller suppliers into the East Africa market, if you look at places like Angola, Nigeria, makes sense. They're just, around the corner, if you like, in global terms. Even Australia and South Africa, some of these areas are supplying into East Africa, whereas the traditional flow from the Mideast Gulf has almost completely been diverted elsewhere. And as we can see, when we look across the Indian Ocean to India itself, India, of course, has a big refining system on the west coast of the country, and that's producing a lot of the LPG need, but they are still a large net importer, and so much of that is coming from Qatar, from Saudi Arabia, and from UAE, Kuwait. That amounts for pretty much all of it, and a very small proportion coming from the United States, as you can see in the light blue. So what does this mean for pricing? Well, it means that, the traditional pricing structures that we use when we're calculating prices in East Africa have still some utility, but we want to move towards a point where we're really reflecting the market as it is rather than the way it used to be. Let's have a look at the next slide, please. Right, so pricing of LPG, as I'm sure you know, is seasonal. If we look on the right-hand side first here, you can see how it peaks in winter in the Northern Hemisphere, gets cold and people use more, and then it drops during the Northern Hemisphere summers. That has been a feature of the market for many years. It's reflected to a lesser extent in other oil markets. It's a lot more marked in LPG. Gasoline, for example, is the opposite, where there's more driving in the summer, so demand for gasoline goes up in the summer. So it tends to balance out in some ways. And to the right-hand side of that chart, you can see how our consultants have taken that model and forecast it forward. I should say these are the Saudi contract price forecasts, so we do forecast and make assumptions about other pricing indexes. But you can see that the assumption is that the prices will perhaps be less, the peaks and troughs will be less pronounced than they were, perhaps as more of the developing world starts to pick up LPG demand, and that kind of levels out some of the effect of that Northern Hemisphere traditional price fluctuations. So on the right-hand side of that chart, you can see how the forecast is for the same fluctuations, but less marked than it used to be, and propane slightly below butane as we go forward. And then on the left-hand side here, I just wanted to compare as we come over the past year after that precipitous crash at the beginning of the COVID crisis, when whole economies came to a halt and demand for oil froze up. You can see just how low crude prices got in the orange. In fact, in some markets in the northern North America, we even had negative prices at times, where people were paying others to take oil off their hands. None of that's happened in LPG, and you can see how the LPG market has been more resilient throughout. And even though those two prices, and it's all in dollars per ton here, have started to converge a little bit towards the end of the chart, LPG has been a lot firmer than crude over the whole of the year, and that's not usually the case. Let's go on to the next one, please. So, I briefly mentioned LPG pricing. Of course, we have different indexes in different parts of the world, and we at Argus report all of them. Though in the past 3 years, my colleagues and I have introduced some regionally specific prices for different parts of Africa. As you can see, this chart that appears in the Argus report every day has import parity prices for South Africa, also West Africa and East Africa, and we've been running these for some time now. So we have a kind of calculated value for the market price of LPG coming into your region. It's intended to reflect the real world costs of sourcing the supply in the relevant market, and the cost of freight, using a time charter equivalent methodology to bring it into in the case of East Africa, Mombasa, in West Africa, Lagos, and in South Africa, Richards Bay. Now these, I should stress, they're not the traditional way that we make our assessments. They are based on calculations, We prefer to look at the market, speak to people in the market, and base our assessments on real reported trade. That's how it traditionally works. So that is what we are moving towards, I hope, in some of these markets. And that's essentially my appeal today, is that if you want to have fair prices for LPG, and that's a real prerequisite to growing the market in a way that's good for consumers, but also good for everybody along the supply chain. If you have transparency about where the market is, or whether supply is coming from, how it's being priced, everybody can take a fair margin and the consumer still gets a fair deal. That's the essence of what we're trying to achieve here. So please do have a look at those prices. In the let's move on, Alfred. Let's flick through the next ones, 1, 2, 3, until we can see all of. That's it. Stop there. Thank you. Back to the map. Lovely. So in this map, you can see how we are taking source prices in different parts of the world where we do have good price transparency, and we're adding freights to different parts of Africa. West Africa, it's whichever is more competitive, of Europe and the United States. And East Africa and South Africa, we take the traditional market of the Mid-East Gulf and add a freight adjustment. Though, as we have seen, in fact, that is not where your supply is coming from. So I'm keen to use platforms like this to appeal to market participants to start the process that is well entrenched in other markets of speaking confidentially to price reporting agencies like ourselves, and we're not the only one, but we are a leader in LPG, to share their trade information, their thoughts about market levels, and so that we can make an assessment based on the real market, not a calculated index. So I would like to start moving towards that next level. There's already some momentum in this direction, particularly in West Africa, and I would like to see that develop here in East Africa too. Next slide, please. Thank you very much. So as you can see, this is a slightly tangled chart, but what it shows you is that the line there in dark blue, if you can pick that out, that's the East Africa index that we publish. There are times when it's higher even than the expensive markets in the Far East that I've talked about, the Argus that I've spoken about, the Argus Far East index in the yellow, though there are times when that market spikes up because of regional factors. And because we are looking at the Middle East rather than the Far East, the East Africa price doesn't track those upward spikes to the same extent. But you can see that at the bottom there, the most competitive, the most cheaply priced product almost always is coming out of the US Gulf. So it makes sense for African buyers to be focused on that market. Of course, you have to pay the additional freight, as we can see in the next chart. Just before we go there, the traditional use of the contract price, the Saudi Aramco CP, which is the kind of stepped index you can see running through here, the grey price, the grey line, that only changes once a month. It doesn't respond to market fundamentals in the same way that daily prices do. So I'm aware it is still used to a great extent in East Africa in particular, and also in South Africa. But I think that now that the trade flows have changed, and now that we have that kind of granular daily data in the markets where you're sourcing your product from, perhaps a shift away from the CFP into more market-based assessments is overdue. Let's go on to the next chart. I mentioned freight. Freights used to be a rather boring market where things didn't change very often, but over the past year, particularly with these big shifts that have caused changing dynamics in the cost of shipping all kinds of products, but in particular the LPG, we can see how this has been quite a volatile market. Prices spiked up, as you can see, during that cold winter that we've had, which really kind of, as we saw on the previous chart, the yellow line of Asian prices really pulling the product and also the freight in its wake as more product was going to the Far East. That's essentially The blue line there reflects the cost of moving product from Houston in the States all the way to Chiba in Japan, and that's one of the prices that we publish. We also have a Middle East or Mid-East Gulf to Asia Pacific price in the orange. It's a shorter distance, so it's cheaper, but it follows a similar dynamic, as you can see. And of course, East Africa sits in the middle of that blue trade route, so it makes sense for some of that freight effect to be felt in the prices that you're exposed to. But if and when you are sourcing your supply, if you have a good eye on the export prices from the United States and the cost of freight, a proportion of that cost that you can see here, then you get to the starting point of a fair price for your product. And what that can do is to help you negotiate with your supplier more effectively. It means that there is a more level playing field of information, and you can ask for a better deal. So if somebody's saying, well, it's Saudi CP plus whatever they're saying, you can have a look at the data and say, well, actually, I could be getting this product at a better price all the way from Houston, because freight happens to be lower at the moment. And you can go back to your supplier and say, well, based on my analysis, the cost of bringing product into East Africa is in fact below the CP at the moment. So that's the kind of analysis that you can do if you have access to these instruments. So let's go to the last slide. Hopefully I haven't gone on too long, and thanks very much for listening. My final thoughts for you are that LPG consumption, as we've seen, is already growing strongly in your region, and it's likely to really skyrocket in the years to come. This brings all the advantages we've heard from other speakers: health, environmental benefits, economic benefits. Of course, as we heard, LPG is kind of in that grey zone. Is it a clean fuel? It's still a petroleum fuel. It causes carbon emissions, but it's much preferable to things like wood and charcoal when it comes to public health benefits and so on. And in fact is more efficient than many of the traditional fuels that we know of. Key to sustaining this trend, if we all agree that it's a good trend and that LPG demand displacing other dirtier fuels is a good thing, key to making it happen, as I've said, is fair and transparent pricing along the supply chain. And that doesn't just mean cheap prices to encourage more consumers, though of course that helps. In order to have a vibrant industry, as I said, everybody along that supply chain needs to get a good deal and a fair margin. And that can only be achieved if people have clarity on what the different elements of that supply chain are. What's the cost at the source? What's the cost of freight? What are the cost of the logistics? What is a fair margin? And are you getting it? So that's really the core of what I wanted to tell you. Secondly, traditionally, pricing structures in East Africa have been based on the Middle East, and they are, as we've seen, a reasonable import parity proxy. But nowadays, so much product is coming from further afield, particularly the United States, that it perhaps now is the time that we can move to a more reflective and more transparent way of pricing LPG in East Africa and other parts of Africa too. And lastly, our appeal from Argus: we are keen to help to develop these trade-based indexes for the regional markets of Africa. The more detail, the more market engagement we get, the better and fairer and more accurate those prices will be. So please do get in touch with me or my colleagues. And I know we have our Africa representative, Warren, is on the call today. He'll be very keen to speak to you if you want to know more information about how you can interact with us. So I'm going to wrap it up there. I may have gone over time. Thank you very much for having me. And I'm happy to take questions if we have time for them.
James, many thanks for that. And yes, questions. I was going to say to everybody, have a look on the right-hand side, 3 tabs down. You'll see a little Q&A box. Click on there and put your questions in there, and we'll keep an eye out for those during the rest of the sessions. James, just a comment from me. I love the phrase skyrocket. We're looking forward to this skyrocketing demand in East Africa. And the other comment that jumped out the page at me was the shift away from CP is long overdue. I've heard that. I guess the first time I heard that was probably 20 years ago. How realistic do you think it will be that CP will finally be put in its box?
Well, it's like a lot of these legacy indexes. They do tend to live on past their let's not say utility, because it does have utility. I mean, it's a price that everybody can see, and it's a price that people are familiar with. And the Saudis, to their credit, are quite good at managing the markets, as we've seen in oil as well. So it's not a disaster to use the CP. What I would say about it is that, given that the trade flows have changed, whether or not you are using the CP, what is most important is the final price that you pay. So negotiating that final discount or premium to the CP is a lot more easy if you can see where the product is coming from, what it was priced at the source, and what it cost to get it to your terminal. So I'm not sounding the death knell on the CP. It'll be there for some time to come, and there is, of course, a derivatives market around it that tends to perpetuate the life of these things. But we also are seeing a lot of use of the Argus Far East Index, plus or minus a netback to Africa. That's something that people are looking at. And we are also seeing prices develop at the US Gulf Coast, so away from Mont Belvieu at the real export point. So there's a lot more transparency at different points around the world now. So the CP is not going away just yet, but it has a lot of rivals.
And a comment coming through just on that very question. The Argus current South African import parity is still, I believe, based on CP. Is that something that you think might change in time too?
Thanks for that question. As many of you on this call will know, that there has been a change just last year in how South African regulated prices for LPG are calculated. The formal price from the South African government is the CP plus an Argus freight calculation from the Mideast Gulf down to Richards Bay. So our import parity index, in fact, is a daily price, and that is based on spot prices in the Middle East plus a freight adjustment. So there's a slight nuance there. So our index is a daily price. The South African price is a monthly price based on the CP. I think that one of the things that the South African government has done is, which is good, is to say that this new index that they are putting in place is not set in stone. The previous one was set up in the 90s. It was linked to gasoline because LPG was just considered to be a kind of waste product that was used in blending into gasoline, which of course is not very conducive to creating a market. So it's taken 20 years to move, or more than 20 years, to move to a more market reflective system, and I applaud them for that. And the other thing that they've said is good, that I think is good, is that it is under review. It's under constant review. And so there are definitely voices in the market that are saying, well, this is a step in the right direction. But in fact, in the Western Cape, all of our product is either being produced locally or being imported from the United States or Nigeria. What does this have to do with the CP? So South Africa, as we know, is a big country. It's on 2 oceans, and it has disparate sources of supply. And just as we see in Mombasa, so much of it is coming from the United States that I feel the next iteration of that South African regulated price is or should have some element of the United States in there, just as we do for West Africa. But that's a government decision. It's not ours to make. We are here to provide different tools, and they use them as they see fit. But if they keep it under review, and as the market continues down this line of sourcing cheap supply from the United States, I think that's the next logical step.
Right. Thanks, James. Have to call it a day there because we are running already behind. We're a little bit late starting. And now I'm looking at the agenda, and we move on to session 7. Now, if you can just repeat your little exercise that you did before, get onto the stage on the left-hand side and leave session 6 and join session 7. Well, you'll see me again.